Meet John. John is 58 years old. He is a retired firefighter. John bought his suburban house back in 2008. He raised his two daughters there. For nearly 20 years, he paid every insurance bill on time. He never filed a single claim. But yesterday morning, a letter arrived in his mailbox. It wasn't a bill asking for more money. The letter canceled his home protection entirely. No warnings. No missed payments. No second chances. John did everything right, but the system dumped him anyway. And this is where things get ugly. John sat at his kitchen table for hours. He stared at that piece of white paper. He tried to understand what went wrong. So John called his local insurance agent. They had worked together for over a decade. But the agent couldn't help him. The decision didn't come from a local office. A computer system thousands of miles away made the call. The algorithm decided John's zip code was too risky. The big news networks say everything is fine. They talk about a booming housing market. But on the ground, the reality is terrifying. Thousands of good homeowners are losing their safety net. Would you feel safe sleeping in your own bed tonight? Knowing a single automated email could ruin your wealth? New downtown concrete condos might be safe for now. But for traditional middle-class neighborhoods, the trap is open. The companies behind this move are State Farm and Allstate. These are household names across America. They didn't stop writing policies because they went broke. They left because the math no longer works. The executives looked at the numbers for 2026. They realized they were losing money on every contract. Mainstream headlines call this a temporary market adjustment. But that is a complete lie. When the largest pillars of finance run away, everything freezes. The richest investors are too afraid to bet on California. Why should ordinary families keep throwing money into it? Desperate homeowners are looking for any alternative. Tiny, unknown local firms are trying to step in. But they charge insane prices for terrible coverage. Why are these huge insurance giants running scared? The main reason is the unpredictability of wildfires. In the old days, fire teams could predict danger zones. They used basic wind charts and historical maps. Now, those old patterns are completely broken. Everyday neighborhoods can become fire traps overnight. Last year, a fire swept through a nearby valley. It destroyed a row of houses instantly. Yet, the homes across the street were untouched. Insurers cannot guess who survives anymore. The television commentators love to argue about climate politics. But John doesn't care about political debates. He cares about the real-world bills on his table. Would you risk your own business in this area? A single bad wind shift costs hundreds of millions. Many California suburbs are miles away from dry brush. But the algorithms do not care about small details. They blacklist entire counties with one click. The state government created the second major problem. California has strict rules on insurance pricing. Politicians go on television to brag about these laws. They claim they are fighting greed for working families. But this artificial price freeze created a dead end. Inflation caused home repair costs to explode. Yet, companies were legally blocked from raising their rates. John's brother lives in a neighboring state. His insurance doubled, but he kept his policy. In California, companies decided to sell nothing at all. Is it a victory when every reliable company leaves? The state leaders had good intentions. They wanted to keep living costs low. Instead, they broke the foundation of homeownership. Here is the part nobody talks about. It is a hidden financial layer called reinsurance. State Farm does not keep all the risk. They buy backup insurance from global syndicates. These huge firms operate in London and faux wall. They pay out the cash during massive disasters. In 2026, global disaster losses skyrocketed. So, these international backup firms raised their prices. They slapped a 30% cost increase on local insurers. State Farm couldn't pass that cost down to John. The state laws blocked them from doing it. So, the global cash supply chain snapped shut. John wasn't going to give up without a fight. He wasn't just a victim. He spent weeks searching for any company that would cover him. He was a retired firefighter. He knew how to manage risk. He contacted dozens of unknown brokers across the nation. He needed active protection to secure his mortgage. Then, a twist. A local broker in another part of the state called him back. "I found one," the broker said. John felt an immense sense of relief, a moment of triumph. He thought he had beaten the system, until he saw the formal offer. The new policy didn't cost his old rate of $1,800. It cost $14,000 per year. But that was not the worst part. He looked at the deductibles, the amount he would have to pay himself. $100,000 just for wildfire protection. The official contract technically offered him active protection, but in reality, the insurance was financially useless. The system wasn't helping John. It was humiliating him with a trap. He had found a solution, but it was designed to ruin him. John couldn't pay $14,000. He was a retired senior living on a fixed pension. The formal offer was a financial prison. He tried to go unprotected to save his checking account, but John forgot about his mortgage lender. Most California homes are tied to a bank loan. Those contracts have a brutal penalty clause. The moment John's protection lapsed, the alerts went off. The bank delivered a final ultimatum to his door. They forced him into an emergency backup plan. This is called force-placed insurance. It costs 4 times more than any retail premium. The bill was added directly to his mortgage. John's fixed monthly budget shattered instantly. Now, the bank is moving to seize his home. Ads call a mortgage a path to freedom. But in this market, it is a legal cage. It can liquidate your equity overnight. John must sell his house at a major loss. The retired firefighter is becoming a financial refugee. Do not look away if you live in Texas. Do not look away if you live in Florida. This is not just a California problem. This is the blueprint for an unaffordable America. The same risk tools are coming to your town. Financial cartels are quietly rewriting the rules of property. They are turning regular homes into luxury commodities. Government agencies continue to release happy statements. They claim the national economy is perfectly resilient, but the data on the ground shows deep cracks. Look at your own property renewals this month. Check your escrow accounts and local taxes. Are the warning signs appearing in your zip code? Share your local numbers in the comments below. We need to track how fast this trap is moving. America has a resilient history and laws may change. But macro solutions take years to arrive. You must see the reality before you get locked in. Subscribe to protect your wealth. I will see you in the next report. The biggest insurance companies didn't leave because they stopped believing in California. They left because they stopped believing the numbers. The only question now is whether your zip code is next.